Join us for FCA's legislative fly-in to Washington, D.C. on July 15th and 16th. Contact FCA if interested. And now, here's this week's legislative update. The House voted this week to approve a $9.4 billion rescissions package, targeting $8.3 billion in foreign aid and $1.1 billion in funding for NPR and PBS. The narrowly passed 214 to 212 vote came after pulling back support from two Republicans. All Democrats opposed the measure. Representative Mark Amodei, RNV, raised concerns about the impact on public broadcasting, and Representative Michael McCall, RTX, objected to the proposed $400 million cut to PEPFAR. With the House vote complete, Senate Appropriations Chair Senator Susan Collins, RME, confirmed her committee will review the measure. The Senate continued its work on the budget reconciliation package. Senate committees are expected to release most of the revised text next week, and will continue to keep you updated as the bill moves forward. How the House-passed budget reconciliation bill would affect FCA contractors. The House passed the One Big Beautiful Bill Act, the Budget Reconciliation/Tax Bill, by a vote of 215 to 214 on May 22nd. While the Senate continues its work on its version of the budget package, we're taking a closer look at the small business provisions in the House bill that could directly affect FCA international members. These provisions are not expected to be targeted in the Senate, but changes are still possible. Key provisions included in House bill for small businesses. Section 199A deduction increased. The 20% pass-through business income deduction is increased to 23% and made permanent. This provides direct relief to S-Corp, partnerships, sole proprietorships, and LLCs taxed as pass-throughs. Bonus depreciation restored. Restores 100% bonus depreciation for qualified property placed in service from 2025 through 2029. R&D deduction reinstated. Businesses can again fully deduct domestic R&D costs in the year they're incurred, rather than spreading the deduction over 5 years, a shift that could improve cash flow for contractors investing in innovation. Manufacturing expensing extended. Immediate expensing for investments in qualified manufacturing and refining facilities through 2029. Section 179 cap raised. The cap for small business expensing is increased from $1 million to $2,500,000, with a higher phase-out threshold. Marginal tax rates extended. The lower individual tax rates from the 2017 law, set to expire in 2025, are made permanent. This is essential for pass-throughs taxed at the individual level. Estate and gift tax exemption increased. Beginning in 2026, the estate and gift tax exemption is permanently increased from $10 million to $15 million and indexed to inflation. This provides long-term planning certainty for business owners concerned with intergenerational transfers. Business interest deduction relief, 163J, excludes depreciation and amortization, the gradual write-off of certain business costs, from the income formula used to limit interest deductions, making it easier for businesses to deduct more of their interest expenses. Contractor reporting threshold increased, raises the 1099 NEC/MISC reporting threshold from $600 to $2,000, easing compliance for businesses that work with independent contractors. Paid family and medical leave credit made permanent, retains the employer credit, up to 25% of wages, now available for insured leave and for employees with 6 months tenure. Here are a few other interesting potential changes. Child care credit expansion raises the business credit cap to $500,000, $600,000 for small businesses, including payments to outside providers. Charitable deduction for non-itemizers allows a temporary deduction for non-itemizers, $150 individual/$300 joint, from 2025 to 2028. Auto loan interest deduction allows up to $10,000 in interest deduction for U.S. assembled vehicles. Limited application, but may be useful for fleet-dependent businesses. Tip income deduction creates a deduction for qualified tips earned between 2025 and 2028. Tips must be voluntary and paid in customary tipping occupations. The deduction is not available for employees earning more than $160,000 and excludes service fields like law, healthcare, consulting, and performing arts. OSHA's informal hearing on its proposed heat injury and illness prevention programs rule. OSHA's virtual public hearing on its proposed heat injury and illness prevention programs rule will begin Monday, June 16th, and run through Wednesday, July 2nd. The rule would establish a federal heat safety standard for indoor and outdoor workplaces, requiring employers to implement heat illness prevention plans, provide water and rest breaks, and train employees on heat risks. The hearing is part of the formal rulemaking process and will help OSHA develop the final version of the rule. A final rule is not expected until at least 2026. Live stream links, schedules, and procedural details are available on OSHA's website.